The usual way to make money in the stock market is to buy a good company at a reasonable price and hold it for long term. As the company grows, so will the stock price. And as an investor, you stand to benefit from this growth. Of course, this simple logic can be permutated many times, but it still remains at the core of stock investing. But there is more to stock investing than pure logic. Peter Lynch put it well when he said stock investing is more of an art than a science. And special situation investing is a prominent example of stock investing as an art. Hello and welcome to ET Money's YouTube channel. Today, we will talk about special situation investing and how you can use it to pick promising stocks. Now, this video belongs to our playlist on how to pick stocks. I've included its link in the description, so feel free to explore it after watching this video. Okay, so let's begin by understanding what special situation investing is. As the name suggests, special situation investing involves capitalizing on unique events or circumstances that can impact a stock's value. Let me explain this with an example. Amid the COVID-19 breakout, working from home became the new norm as the whole world was forced to be indoors. This benefited Zoom Communications, a communications technology company primarily known for its video conferencing application Zoom. The company's stock price jumped from about 67 at the start of January 2020 to 559 in October 2020, a massive gain of 8 times in about 8 months. Of course, the euphoria settled over a period of time. Currently, the stock is available at $85. Now, Zoom exemplifies a special situation. COVID was a crisis that hurt most sectors and the economy at large. However, there were pockets that profited from it, such as technology and pharma. Now, special situation investing seeks to tap such opportunities. Such opportunities often don't entail secular growth over an extended period. So a key part of the strategy is to exit a special opportunity timely. That's why one can also think of special situation investing as tactical investing. And if you thought such invest would be few and far between, think again. Numerous such events have punctuated the market's advance over the years. Broadly, special situations can be classified into 5 broad buckets: company specific, industry specific, macroeconomics, corporate actions, technology disruption and innovation. Let's talk about them one by one and also see some examples. Examples of company-specific special situations include a change in management which can propel the company in a new direction, mergers and acquisitions and demergers which can unlock synergies, open new markets, unlock value and so on. Corporate restructuring that can optimize way of operating. Sale of assets or a line of business which can result in a windfall and can improve overall efficiency. Business controversy and other unforeseen circumstances which can provide a contra or value opportunity. Now, a good recent example of company-specific or rather a business group special situation is the crash in Adani Group stocks due to bribery allegations in the US. The stocks crashed by up to 23% in a single day. Now, there was a bounce back too in a couple of days after the group denied any wrongdoing, but the matter isn't over yet. Thus, a special situation opportunity has been created. Now, earlier in January 2023, a similar special situation was created when Heinberg Research, a US-based hedge fund and short seller, accused the group of corporate malpractice. The stock stumbled then as well, but the stock eventually bounced back. Now, GQG Partners, an investment management firm, took advantage of the crash in Adani shares and later made big gains on its Adani investments. Alright, let's next talk about industry-specific special situations. The examples of industry-specific special situations include regulatory changes which can be both good or bad for a sector or industry, government reforms such as production-linked incentives and incentives for renewable energy installations, sector-specific headwinds or tailwinds due to business cycles and economic conditions, change in budgetary allocation, taxes and duties, industry-wide consolidation which results in fewer players, something we saw in the case of telecom sector. For instance, consider the defense sector. Between August 2020 and March 2024, the Nifty India Defense Index delivered a massive 68.4% per annum as the government restricted foreign defense imports. During this period, Hindustan Aeronautics outpaced the index and delivered an unbelievable 82.3% per annum. Another example is the aviation sector. which has been going through a phase of consolidation since Jet Airways and Go First exited. This consolidation has proved to be quite beneficial for Interglobe Aviation. The company's market share has jumped by hefty 28 percentage points, and its stock has also been on a tear. Okay, so this brings us to macroeconomic special situations, the third type. Now, macro or global special situations include things like geopolitical tensions or wars, with recent examples being the Russia-Ukraine war and the multiple battles between Israel and other Middle East countries. Change in political regimes in key economies such as US and European countries. Global financial problems which keep occurring from time to time. Lately, many developed economies grapple with rising inflation and interest rates. Movement in commodity prices, especially those of crude oil. A spike in crude prices can stoke inflation. Adverse movement of exchange rates, especially the USD-INR rate, which can make imports costlier. For instance, when Russia invaded Ukraine in February 2022, the fear of a war between Russia and Western powers spooked the markets. The Sensex fell by over 2,700 points, thus crashing by 5% in a day. That day, Tata Motors fell by 10% as the company had significant business interests in Europe via its subsidiary JLR. The stock also remained range-bound for the next few months. However, as the war spillover was averted and the company reported strong numbers, the stock raced. From its low of 372 in May 2022, the stock rallied to a high of 1162 in July 2024, thus more than tripling in just over 2 years. Even after the recent correction, the stock is still up over 2 times. Okay, let's next talk about how corporate actions can offer special investment opportunities. The prominent examples of corporate actions are buybacks, special dividends, delisting, bonus issue, promoter increasing or decreasing stake in the company, and so on. But why do these matter? Well, buybacks signal that the company thinks its share price is at a bargain and that could be a value investing opportunity. Special dividends on the back of good performance can indicate strong fundamentals. Delisting often sees the stock price go up as the company needs to acquire shares from public shareholders, and they would often want to sell at a premium. In a bonus issue, free shares are given to shareholders by converting the accumulated earnings into shares. Bonus issues improve liquidity, reduce the stock ticket size, and increase the company's equity base. If a promoter increases his stake in his company, that's considered positive as it shows the promoter's confidence in the company's prospect. The reverse is true too. For instance, consider Tata Power. The company's promoter, Tata Sons, and Tata Sons chairman N. Chandrasekaran acquired shares in Tata Power between 2019 and 2021. Their acquisition price at the time was between 25 and 75. Currently, the stock trades at around 400. Now, the promoters likely found the stock price depressed at the prevailing levels of 2019-21, and they were confident of the company's prospects. Next, let's talk about the last type of special situation. Now, this type of special situation probably requires the least understanding as we all have experienced it firsthand. We hear about companies every day that are inventing new ways to working through technology, thus improving efficiency and challenging the status quo. By betting on such new age companies, one can become a partner in their growth. Now, a few weeks ago, we did a video on how to pick the best new age stocks. I've included its link in the description. You can watch it later to dig deeper into this type of special situation investing. Now, a prominent example of a company that's riding high on technological innovation is Zomato. The company is leveraging technology to redefine hyperlocal e-commerce, including food delivery, quick commerce through Blinkit, dining out, and events. Lately, the company has turned profitable too, and that's the icing on the cake. The market has taken note too, and the stock is up about 146% in the last year. But the company has its fair share of problems too. Now, if you want to know more about Zomato, you can watch our video. I've included the link in the description. Okay, so these were the major buckets of special situation investing. Of course, the scope of special situation investing can be quite wide. So what we've discussed is not exhaustive, but it does give you an idea about what special situations are and how to start looking for them. But as always, there are no free lunches. Like other forms of investing, special situation investing has its demands too. Let's take a look at them in the concluding section of the video. So special situation investing looks interesting, but what does it require from an investor to be successful at it? Now the primary requirement is to keep your ears and eyes wide open so that you can spot a special situation well in time. If you get late, the opportunity may no longer exist, or stocks involved may have already gone up. Added to this is the challenge of determining when to exit from a special situation stock. If you get late, you risk surrendering all your smart gains. And of course, you will have to track special situation stocks more often than you need to track regular stocks, as their fortunes can dramatically change overnight. Now, given all this, special situation investing is meant only for investors with the required time, interest, and skills. If you realize it's too much work for uncertain rewards, you may want to pick stocks via classical fundamental analysis. And yes, even if you decide to go for special situation investing, don't miss checking the stock's quality and valuation. They will act as crucial safeguards if you err. Also, start small and slowly raise your exposure to special situation stocks as you gain success. For stock ideas and further study, you can also track the 4 special situation mutual funds available. Most of them are quite new, but their moves can throw interesting ideas. On your screen are the top 10 stocks of these funds to help you start your research. But do note that these stocks, or for that matter any stock discussed in this video, is not a recommendation. So research thoroughly and do your own due diligence. Also, don't blindly copy fund moves. Use them as a starting point to learn and research further. And that's all I had for you today. If you found this video useful, do share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.